Welcome back. Markets looking to end the week on a strong note. Dow Industrial set to open up about 80 points this morning. Joining us right now is the Chief Investment Officer of CalPERS, Ted Eliopoulos. CalPERS is the nation's largest pension fund with assets of roughly $355 billion. Ted, it's great to see you. Thanks so much for joining us.
Maria, thank you so much for having me.
A lot to talk about you and and what you're doing at CalPERS right now. But what's your take on the investment environment right now, the markets?
Yeah, well, the markets are robust in many ways. The economy is surging here in the U.S., up to 3% growth rate in the first half of the year from this very long, grinding recovery of 2.25%. Other global economies are moving forward as well, Europe, Asia, so a generally very supportive macro environment. In addition, the earnings season has been, hugely strong.
Which is why you've got 50% of your money in stocks.
Yes.
But you're shifting the strategy, announcing yesterday plans to launch private equity funds.
That's right. So, as a long-term investor, we're looking at the future. We have a very strong equity portfolio, as you said, and now we're looking at how can we increase and grow at scale our private holdings of portfolio companies, and we're announcing 2 new vehicles that we're exploring to do just that, to invest over the very long term in private companies in addition to the other strategies we have in our portfolio.
So, Ted, it's actually like a private equity model where you're going to have direct investments in portfolio companies? Is that how you're going to do it?
That's exactly it. So we're going to set up two vehicles to invest directly into portfolio companies, and we're going to own them for very long periods of time. They'll be evergreen structures to invest in particular sectors of the economy. One vehicle will target innovation, technology and life science and healthcare sectors. The other will target the main economy, industrial and consumer sectors, and own those companies for long periods of time.
Ted, why do this now? Are the valuations on private holdings, on private companies, better than those that are publicly traded?
No, valuations are elevated across the asset classes generally. We're a long-term investor. We're looking out how to invest over the next 10, 20, 30, literally 60 years. So this is actually a good time for us to review our governance structure, our business models, and set up a vehicle for private investing that really is looking out 10, 20, 30, 40 years from now that we haven't had that ability to do in the past.
Despite all the growth in the market, a lot of individual investors, we've seen a lot of studies that say they're still nervous. They still are afraid that their retirement savings are going to go away. Should they be?
Well, we're always concerned. We're always nervous. There are things to worry about going forward. Interest rates are moving. Inflation, while we haven't seen any signs of it lately, that's a concern on the horizon. Trade negotiations. We're seeing growth slow in Europe a bit. So there's always considerations to take into account when you see valuations at these levels. But the main thing, as for CalPERS and institutional investors and for individuals, is to think about their asset allocation as a whole, to stay true to your strategy and diversify your assets through all of these cycles.
Does your investment in private equity and that innovation that you were just talking about, some of these new industries that we talk about all the time, like robotics and autonomous, does that change the scope of investing on the stock side? So tell us how you allocate your money in stocks. Is it ETFs? Is it individual companies?
It's individual companies. We own them broadly based index that we invest internally at CalPERS. So we're able to invest in the stock market for a basis point or two.
So does that change given now you're putting some of the money in technology companies?
It's a great question. So this new vehicle allows us to manage our entire equity portfolio from a risk standpoint as one. So what it really does for our private equity exposures, we can take much more concentrated positions because we can offset these large concentrated investments in private companies through our equity portfolio, our public portfolio.
In terms of bonds, particularly treasuries, are we at the beginning of a bear market for treasuries? Is this going to be a multi-decade rise in longer-term interest rates and also a decline in the prices? Again, we've enjoyed more than 30 years of a bond bull market.
Exactly. We've seen this 30-year decline. I don't know that we'll see a 30-year rise, but we anticipate increases in interest rates coming forward in the near future.
So, how many? You think the Fed overshoots, or are you comfortable with Fed plans of what, 3 or 4 rate hikes in total?
We're convinced, like others, the 3 to 4 rate hikes. I don't think the Fed will overshoot. I think they're very cognizant of this recovery, and will be very moderate in their approach going forward.
Ted, you announced earlier this week that you'll be stepping down.
I did. After a long career at CalPERS, I'll be stepping down at the end of the year. I'm going to spend the next 7 months to make sure the transition to CalPERS is seamless and smooth. I've worked too hard, too much of my professional career at CalPERS to let this transition affect any of our business happenings. For family reasons, we'll be moving here to New York to be closer to my daughters, and my wife and I are really looking forward to that.
Fantastic. Congratulations on a great run, Ted.
Thank you so much.
Come back soon before you step down.
I sure will.
Ted Eliopoulos joining us, CalPERS.